At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, Electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDI.
Half of the case, processing and launch.
At Ines Group Berhad, we have built a strong foundation.
Good evening, investors. Welcome back with me, Dini, on KleverStock, serving you the latest updates for the closing bell this evening. Kicking it off with the evening updates from our local bourse. Bursa Malaysia extended its losing streak into a third consecutive session today as cautious market players trimmed down their equity exposures ahead of a major central bank policy decision. At the 4 p.m. closing bell, the benchmark FVM KLCI slipped further into negative territory, dropping 3.09 points to finish the day below the psychological level at 1,679.84. This defensive positioning was visible right across the broader market boards, with sell-off heavily suppressing secondary indices. The retail-heavy FVM ACE index erased 18.60 points to settle at 4,855.55, while the broader base FVM AMAS index dropped 17.15 points to map out a final print of 12,445.64. Market breadth finished clearly skewed toward the bear camp for another afternoon as 578 declining counters handily outpaced 414 gainers, leaving 521 equities completely unchanged. Transactional activity showed an incremental tick up in volume but a slight dip in overall transactional values. Total market turnover hit 2.367 billion shares traded, accumulating a total transactional value of 1.432 billion ringgit. Market strategists noted that while heavyweight counters like Maybank and CIMB saw minor fractional support, persistent profit-taking in large consumer and industrial blue chips kept a tight ceiling on any afternoon recovery attempts. This wait-and-see behavior is heavily tied to macro factors as the market keeps its focus locked on Bank Negara Malaysia's Monetary Policy Committee meeting tomorrow, where economists widely project the central bank will keep the benchmark overnight policy rate steady at 2.75%. Now for some local news developments. J-Land Group, the specialized real estate and infrastructure arm of Johor Corporation, has signed a strategic memorandum of understanding with global logistics giant DHL Supply Chain Malaysia to dramatically scale up supply chain capabilities within Ibrahim Technopolis known as IPTEC. The high-profile partnership is specifically designed to explore the commercial feasibility of a specialized build-to-lease logistics facility model. This initiative rolls out across the sprawling 7,290-acre industrial and innovation master plan located in Johor. The physical development takes shape at a time when Johor is rapidly cementing its reputation as one of Asia's absolute fastest-growing data center hubs, heavily propelled by multi-billion ringgit capital inflows from global technology firms, advanced manufacturers, and hyperscalers. Both groups aim to leverage this joint framework to address the soaring demand for specialized, high-capacity infrastructure to secure the highly complex warehousing requirements of digital enterprises setting up shop within the ecosystem. Under the commercial terms of the agreement, DHL will inject its deep global market intelligence, precise technical warehouse specifications, and extensive customer networks to accurately gauge market demand. In return, J-Land Group will seamlessly integrate these logistical insights into its long-term site planning, build-to-suit asset pipeline, and corporate customer engagement strategies. J-Land Group Managing Director Dato Akmal Ahmad reiterated that the mega hub was intentionally engineered to integrate elite infrastructure, top talent, and seamless logistics. He noted that the next phase of development will focus heavily on expanding Exclaim Discovery City to strengthen the holistic operations of the ecosystem. Apologies for the technical issues. DHL Supply Chain Malaysia Managing Director Mario Lawrence added that this early-stage integration positions the global logistics specialist to aggressively expand its data center supply chain footprint in an indispensable growth market. Continuing with some economic news. Malaysia is preparing to lock in its status as Southeast Asia's premier maritime gateway through the structural rollout of Port Klang's third terminal on Carey Island. Transport Minister Anthony Loke Siu Fook disclosed that the multi-decade mega project, which is projected to take nearly 20 years to fully complete, is a vital long-term initiative to keep the country's maritime logistics sector highly competitive over the next 20 to 30 years. Currently, Port Klang maintains an annual handling capacity of roughly 15.14 million 20-foot equivalent units or TEUs. To put that into perspective, neighboring regional competitors like Singapore's upcoming Tuas port are engineered to process up to 60 million TEUs annually, making it roughly 3 times larger than the current domestic footprint. The Transport Minister emphasized that matching this scale requires massive infrastructure investments. The Carey Island expansion to specifically designed to transform the localized shoreline into a mega port capable of absorbing substantial global cargo volumes. The Federal Cabinet has granted in principle approval for the framework to proceed under a public-private partnership model utilizing a build, operate, transfer concession structure, with final physical works set to kick off immediately once remaining land clearing arrangements are finalized with the Selangor state government. Meanwhile, addressing the macro environment, the Transport Minister highlighted that ongoing geopolitical tensions between West Asia have unexpectedly transformed Malaysia's geographical location into a safe haven for global logistics lines. Rather than hampering commercial operations, global trade anxieties have redirected vital cargo flows toward Southeast Asia. Both Port Klang and the Port of Tanjung Pelepas logged positive transshipment volume growth during the first quarter of the year as international shipping alliances increasingly reroute their fleets to domestic hubs out of strict safety considerations. Moving on to the corporate front, ACE market-listed engineering specialist Pekat Group Berhad has aggressively strengthened its position within the thriving regional data center supply chain, officially securing 2 major independent infrastructure contracts carrying a combined transactional value of 46.94 million ringgit. According to regulatory filings released this afternoon, the specialized work scopes center on the comprehensive supply, engineering and installation of advanced structural earthing and lightning protection systems for 2 highly sensitive data center developments located across separate economic corridors. The first subcontract, coming in at a firm 19.73 million ringgit, is explicitly earmarked for a massive hyperscale data center facility currently undergoing construction in Port Dickson, Negeri Sembilan. Operational timelines dictate a completion target locked in for June 30, 2027. Concurrently, the second and larger contract tranche, valued at 27.21 million ringgit, will see the engineering group deploy its specialized teams down south to secure an upcoming data center asset in Johor, with its final handover planned by September 19, 2027. Management highlighted that these advanced earthing and lightning protection protocols act as absolutely non-negotiable safety networks for modern server hubs. Because these hyperscale facilities contain billions of ringgit in high value, highly sensitive processing gear and operate under strict, non-stop global uptime requirements, elite surge and lightning protection are essential to avoid catastrophic systemic failures. Pekat Group Chief Executive Officer Tai Yi Chi emphasized that this double contract win strongly highlights deep institutional client trust in the company's technical expertise and impeccable delivery record. Moving forward, the group remains hyper-focused on leveraging its specialized strength across power protection and power generation to actively secure more pieces of the region's explosive data infrastructure pie. Financially, both structural projects are modeled to contribute highly positively to the group's net earnings profile starting from the current financial year. Rounding off today's closing bell with market updates, Malaysia's Employees Provident Fund has successfully completed a massive divestment of its overseas real estate holdings. Global alternative asset manager Blue Owl Capital Incorporated has finalized a landmark agreement to buy a substantial portfolio of United Kingdom private hospitals from the State Pension Fund. According to institutional sources familiar with the matter, the New York headquartered investment firm paid roughly 1.3 billion British pounds, equivalent to about 1.7 billion US dollars, to acquire the 12 medical facilities. The properties are currently operated by Spire Healthcare Group under long-term leases, and real estate manager Moore Capital Partners will be retained to handle ongoing asset management duties. The transaction was executed through Blue Owl's specialized European net lease fund, an alternative vehicle that has raised about 1.3 billion euros to date. EPF had originally appointed property broker Knight Frank to aggressively market the portfolio last year as part of its strategic asset reallocation. While mainstream commercial real estate deal-making has slowed down noticeably following the conclusion of the cheap money era, specialized properties paired with long-term, index-linked leases have emerged as a massive bright spot for institutional funds. Sovereign wealth managers and private equity firms are heavily targeting healthcare real estate because inflation hedge yields and stable, state-backed or quasi-governmental tenant base provide an ideal shade against broader macroeconomic volatility. This growing corporate appetite has fueled intense competition across the UK medical sector, moving parallel to rising consumer demand as the British National Health Service battles surging patient waiting lists. Recent survey data highlights that 1 in 7 British citizens use private healthcare options over the past year, cementing strong long-term fundamentals for the newly acquired asset pipeline. That's a wrap for Closing Bell updates with me, Dini. Thank you, investors. We shall catch up in the next session. Goodbye.